Hello, hello, hello. My name is Jason Allen. I'm a realtor and real estate planner based in Palm Springs, California. Every Monday, I like to do a quick market report, and I focus on a different city in the Coachella Valley for each Monday. Today, I'm a little stymied. It's December 4th, 2023, and with the first of the month happening on Friday last, we don't have our new reports yet. I'm going to share some things that I do when this happens. And it's not my go-to, but it will sort of work us through the market in a way. I'm going to share my screen, which I like to do. And I'm going to start with the desert dynamics, only to show you if you can see my cursor, I'm circling October. We have not yet had the November numbers processed by Desert Dynamics or by the good folks at Chicago Title who utilize Altos or Trend Graphics. However, I can use some things about the Altos numbers by showing you some different charts. So let me scroll to the top. Let me point out that we are focused on Palm Springs at the moment. And I break this into two segments for those that don't do this, haven't done this with me before. I do houses, then I do condos. And unfortunately, while I do like their market action index, and I typically end with this, they do have a series of other reports. It's just a little bit more difficult to follow them. So bear with me. We'll go through this. And then come next week, when it would typically be Cathedral City, I'll quickly do a Palm Springs check-in. So if I scroll down, and by the way, this comes to us through Chicago Title, Christian and Shauna Bailey. I always appreciate these reports. And let me just say that Palm Springs houses are not doing great. And I imagine that when the numbers come out for November, we're going to see this reflected. Let me just say very broadly part of our problem. And I've said this before during COVID, houses that were not in a community interest development, commonly referred to as an HOA, were eligible or are eligible for the most part to become vacation rentals. And as COVID created a tremendous demand for these vacation rentals, these single family homes essentially became priced as businesses, not really houses that people would buy. As the market has shifted away from vacation rentals, meaning folks are being required to go back to their main office, not able to work remotely as frequently, the prices on these houses have softened dramatically. There are still people buying them. There are just fewer people buying them. And compared to pre-COVID, the house price is very much elevated. So in other words, a great 3 bedroom, 2 bath house with a pool and mountain views that might have been 800,000 before COVID seems to be settling somewhere between 1.1 and 1.5, depending upon the location and the quality of the house, we'll say. Certainly that's speaking to a house that's renovated, move-in ready, has a lot of nice finishes and nice features about it. If the home is in a neighborhood where there may be wind or fewer houses have been renovated up to that standard, then you're going to have a lower price point. Or if the rental vacation market permits, short-term permits are not available in that neighborhood, then the price is going to be depressed as well. All right, broad statements. Condos not experiencing that because condos, by and large, are in a community interest development. There are 3 developments in town that I can think of off the top of my head that permit less than 30-day rentals. And I haven't seen the prices on those units really come down. And I haven't seen prices on condo prices come down much. Like we did see an initial fall off, but um, they're kind of holding steady. So all of that being said, let me scroll down and just point out that the way the Chicago title folks provide this information, it gets broken into market segments. Here are the segments down here, and they perform differently. And they break them down by median price, and median is the house that is in the middle. So half of the house is sold above that, half of the house is sold below that, and they break it into quartiles. So there's not, it's pure math here. It's not as if we want to put one in one or one in another. Having said that, I'm going to now switch over to a couple of other charts. I'm not going to go through all of them. We're going to look at the median price. So this is where they're getting the median price. You can see that median prices have been running fairly stable. It's the high end that's taking the hit. And especially from the peak in May of 22, we've seen nothing but declines, slight uptick, but mostly it's declines. It appears as if the median is coming up a tad. That's helpful if you're in that price point. I can tell you that I have a listing in the high end, and we have taken 2 price reductions with still very, very little interest. And if you're down into the lower half, we'll say, um, or even the lower third, much better prospects. So this goes up to that 1495. This is kind of in between these 2 quartiles is what I was talking about. And you can see we've absorbed 5 at the 3/4 mark, 2 below that. And in the very first quartile, we've seen an absorption of 9. So you see where things are moving in those price brackets. It's taking longer. Days on market, of course, you see how those are all elevated, almost 2 months in each of those lower quartiles. And then let's go over to price per square foot. This is a little bit more encouraging. You do see where what appears as if the high end is doing very well. Let me just say what's happening is that typically as the price of the house goes up, presumably the square footage increases. Bigger houses, bigger price tag. Because there's downward pressure on that, what we're seeing is smaller houses selling for higher price per square foot. And that's largely because the houses that are done, triple mint, as they say in the East, are the ones that are selling for the most money. And so do you see the correlation that I'm trying to draw out of this explanation? That better improved smaller houses are selling, which is what's keeping the price per square foot higher. Does that mean that once you get up into the $2, $3, $4 million houses that we're seeing those move as quickly? No, this is a price per square foot. And as I've been talking, I pause on this. You can always rewind, pause the video, and look at these numbers more closely. Let me go to one other chart and just talk about relisted. Or actually, I'm going to quickly go to properties with price increases. You'll see there are virtually none. 1% and 2%, 3% at most. But if we go to properties with price decreases, you do see that a third to almost a half, in some cases, are experiencing some sort of a price decrease. Now, that can be the way they calculate numbers, that can be a price decrease as reflected to obtain an offer. In other words, we're on the market for 500,000 and now we're going to lower the price to 475. Or it can be reflected in this chart as we're listed at 500, but we close at 475. This chart just doesn't tease it out in that way. That's how they include that as a price reduction. And then I always like to just look at this. How many times are properties being relisted? We have anywhere between 12 and 22% of the houses being relisted. That means that either the homeowner stuck with the same agent and listed the property again, or they went to a new agent and listed the property again. Now, why would that happen? Why, let's say if I had a listing and it was a 90-day listing, why would I let that expire to relist it? Well, our days on market restarts if I do that. It's kind of a tricky thing. It's just the way our multiple listing service looks at that. In other parts of the state, I know that they say that a property has to be unlisted for some length of time before it can be relisted and not have the days on market continue. And depending upon what website you look at, the days on market may not reset. So sometimes you'll look in two different sources and it'll appear as if there are two different totals of days on market, and that's why. Uh, if it's showing higher on one and lower on another, it's probably because an agent relisted the property, and whatever website you see it as higher, they're just combining the two listing periods. All right, let me quickly go over to condos. A little bit brighter picture here, in my opinion. We start with let me go back to, instead of starting at relisted, let's go to the market action index. This is the one chart that I include when I have my other charts available to me. And it shows it as a slight seller's advantage. This is true. This is true in the houses. It's just that it's a little bit stronger as a seller's advantage. And if I scroll down, we're still into the market segments. And you can see here where we are showing an absorption across the board. And at most, we have a segment that's on for about 2 months. Everything else is landing closer to a month and a half. That's promising. That is good. Let me go to the market action index. Here's the market action index. And we went over to the median price. And you can see where our median price is holding stable. We did have a fall off on the high end. It's holding stable though at this point and for the last several months, most of this year practically. I want to go to properties with price per square foot. And you can see again, this is remaining stable. It was our high end that sort of took a hit. And we're remaining fairly stable at this point. We go over to relisted. You have some, not quite 10%, but you see where in each price quartile, we are seeing properties being relisted. We go properties with price decreases. Again, you see across the board anywhere from a third to almost a half having a price decrease. But then the flip side of that, the corollary of that, is that you have 2/3 to a half that aren't having a price decrease. So that has a lot to do with what inventory is available. Let's see, do I have any with price increases? No, virtually none, statistically none as far as I'm concerned. And then let me take a quick look at our inventory, and you do see where our inventory is increasing. That, by the way, is what's pushing this down. This is giving buyers more leverage in the marketplace. If there are more things to choose from and we don't see a greater influx of buyers, then as a consequence, there are few buyers per property, and a seller has to just sort of work with whatever offers show up. If they get an offer, then that's who's they're gonna go into contract with if they can work out some deal. This shouldn't give any buyer the expectation that they can simply drive all of the decisions. It really is it is an opportunity for both buyer and seller to exercise whatever leverage they have. And for a seller, if they don't need to sell, and we're seeing that a lot, sellers are not getting the number they want, so they're choosing to take their property off the market. Here's what I can say. It will be a point. This buyer opportunity that's out there is really happening because interest rates have gone up. Now, our interest rates are at historic numbers. We're not in the double digits at this point, and I don't think we're going to get there. We've seen inflation come down for the 5th consecutive month. At some point, and interest rates have gone down a tad over this period. At some point, we're going to level off somewhere in the sixes. At that point, buyers are going to be, after a year, they're going to be completely familiar with a 6.5 or 6.75 interest rate, and they're going to come back to the market. And when that happens, then you're going to see that advantage, if you will, move more towards the seller. and it's going to move more toward a seller because there are going to be the same number of properties in the marketplace, but more buyers. So instead of one buyer, there's going to be two buyers or three. And so the seller has more choices. They can exercise their leverage at that point of negotiating and then go through the deal with the buyer that they end up with. So that's what I have for today. I apologize. There's no control I have over when the numbers become available to us. You'll notice this is publishing later in the day. I really held out hoping that we might see those charts come through. If you're seeing this tomorrow, the next day, and you have a specific question, just reach out or put a comment down below. As always, I would appreciate it if you subscribed. If you like this video, hit the like button. That enables it to trend a little bit higher in YouTube number world, YouTube search world, recommendation world. And that's all I've got. Thank you as always. I enjoy doing these reports. Bye now.